DVLT just got a patent allowance for asset tokenization. That sounds huge, but the business question is narrower. Does this become a licensing moat, or is it still another announcement waiting for filing proof? Here is the clean way to read it. Datavault AI announced that the U.S. Patent Office issued a notice of allowance dated June 4th, 2026 for an application called System and Method for Tokenized Minting, Authentication, and Utilization of Assets. That title matters because it is not just saying we can mint a token. The published application describes a broader workflow. An asset can be physical, virtual, or data-based. The platform can enhance it, tokenize it, wrap the token with metadata, mint it, track ownership, and use an inaudible tone or identifier for authentication. In business language, DVLT is trying to protect a trust layer. Tokenization by itself is not rare anymore. The harder business problem is proving what the token represents, who owns it, whether the record is authentic, and whether another platform or exchange can safely use it. If DVLT's patent family covers part of that life cycle, the long-term upside is not just one product sale. It could support licensing, exchange infrastructure, partner integrations, and higher margin intellectual property revenue. But investors have to slow down. A notice of allowance is not the same as commercial proof. It does not mean final claims will be broad. It does not mean customers must use DVLT. It does not mean tokenization contracts instantly become recognized revenue. And it does not mean shareholders automatically get per share value. The company gives that risk frame itself. Claims may narrow, face challenges, be worked around, or fail to create expected licensing revenue. So the real thesis is a proof ladder. Step one is patent allowance. Step two is product integration. Does the patent show up inside the tokenization platform, the exchange layer, licensing agreements, or partner workflows? Step three is paying customers. Do counterparties pay recurring fees, transaction fees, license fees, or setup fees for this protected workflow? Step four is filing proof. Does that activity reach the 10Q as revenue, cash collected, gross margin, and lower cash burn? That last step is why the stock still belongs in the proof box. In the first quarter filing, DVLT reported only a few $1 million of revenue, a much larger net loss, and meaningful cash used in operations. The company also said it would need additional proceeds during 2026. The bull case is that DVLT is assembling a patent-backed toll road for tokenized assets. If real-world assets move from hype to regulated infrastructure, then authentication, metadata, ownership records, and compliant utilization could become valuable choke points. The bear case is that the patent story stays ahead of the income statement, while investors still wait for cash, margin, and dilution control. Watch three things next: actual patent issuance and claim scope, new licensing or platform agreements that name the tokenization workflow, and the next quarterly filing for revenue quality, cash collected, gross margin, and share count. My bottom line, this patent can strengthen DVLT's story, but only cash, revenue, margin, and dilution control can upgrade the stock.